Hello all, welcome to Pivotal Traders. So tomorrow is the expiry day. Let's quickly jump in to discuss what all strategies can be looked upon and what all levels are there for the black lines. So congestion zones become very important for us to analyze the functioning of the black line, especially around these areas. And you can see that around the vicinity of the congestion zone we look on to develop and to reduce these black lines. So these black lines are the historical level of price where maximum trades have taken place, and around this congestion zone. So if we talk about this particular area, this box, then maximum trade has been taken at the black line. So once a rally has come into place from this point, then a replication can be possible. It can act as a good support point when the price comes back to this level. So this is the significance of the black line. So that's why I always plan my expiry around the black line as much as it is possible. So let's quickly first look at the data points and then try to develop our biasness, even though we'll be doing option selling on both the sides. So the biasness is that something where the psychological level of 41,000 has been breached, and this comes to the fact that Wednesday, as I already discussed in my Telegram group, also in the morning podcast also, that Wednesdays are usually the long unwinding and the profit booking days. So that's what happened. The color of the candle on Wednesdays are usually red in color. So that's what happened today. But you see that the bank nifty is in tight range since last 3 days now. So the range of the bank nifty, if we just calculate the open and the close price range, it is just of around 350 points or something. So it is still into a very tight range. So if there is a bend from here, then the next support would be at the black line here, and if it continues to fall to the downside, then 39,650 can be a good support point. So first let's look at the data points. So if we look at the data points of the bank nifty in the OI stats, we see that much of a call writing has come into place around 41,000. And if you are to look at the option chain and try to gauge the sensitivity of the writing, then you see that 41,000 here has witnessed 7 lakh increase in the call writing, where 41,200 becomes a better bet or a safer bet for the call writer, where the maximum addition has taken place. So if you consider 8 lakh 30,000 and 7 lakh, that is not much of a difference, because 41,000 was a psychological level and that was broken, and we saw that many this put unwinding has happened here. So the people got scared, the put writer are getting scared around 41,000. So this is a typical scenario where 41,000 can be a good resistance point for tomorrow. That is to be watched for. And if we look at on the put side, the maximum addition has been around the 40,800. So this is the 40,800. You see 1,33,000, the maximum addition. You see how scared are the put writer now, because you see the call writer are adding around 7 lakh of contract and put writer are only adding around 1,33,000. So this also, you have to also look at the magnitude of the call writing. The magnitude of the call writing is 18 lakh, where it is the maximum addition, and where on the put side, even at the 41,000, there seems to be that the magnitude is quite high. And once we go further away, once we go below, then the confidence of the put writer are slightly increasing. But you see, even then the put writers are very much confident even at this price level. So there is a sense of psychology where the 41,000 has been breached. But even then the put writer will not keep it a very simple game for the call writer. You see the amount of magnitude of the put writing is also quite humongous, around 41,000 strike price. So this is the conclusion from the data, that the fight would be there, but the fight would not be easy, and we have to be vigilant about it. And if you look at the PCR setting was quite favorable, in the sense that it was giving indication of a call writing which was leading since the morning, and the PCR was steadily decreasing, and it was keeping maintaining its position, not getting good amount of spike as it was getting since last 2 days. And after 2 o'clock it fell to around 0.81. So the PCR is a little bit bearish. I will not say that it is it is not making much of a difference into our decision, but yeah, there has been some kind of change here. And yeah, so let's quickly jump into the price action front now on the 15 minutes chart. And we have 3 black lines here. Now these black lines, the performance of these black lines depends upon how the market will open tomorrow. So the market, if it opens flat, that means the urge where it was which was originated today on the Wednesday can be continued tomorrow, and the continuation can give a feeling to the call writer that they are winning. But it can be a typical kind of expiry where a doji kind of formation, that the market falls down, then the market goes up, then the market closes around exactly from where it started the day. So this can be a possibility for tomorrow, and the black line can be taken as a good support, the first black line of 40,300. okay, now in the event of a gap down, that means the downtrend, earlier the market was making gap up, it was having a trend continuation on the upside. Now if it opens on the gap down node, that means something fundamentally has changed. So that change might create a panic kind of scenario where the market can become a little bit jittery about the nature of its altitude, and can look to find a more normal kind of price where it feels very much comfortable, and can be a volatile day. That's what I can say, that it can be a volatile day in the event of a gap down opening. So this is the second conclusion. Now the third possibility is that the trend, which was this gap which was continued on the upside, had attempted to move quite significantly on the upside. If it opens gap up, then the first and foremost, because most of the gaps happens to fill as soon as they are created. So that's the logic where I always stress to the fact that if there is a gap, then it should be filled up very easily within few minutes of opening of the session. So it can happen like this, can break the black line on the upper side, and can be closing above 41,000 for sure. So nothing is sure, but like, yeah, you can judge the sense of confidence where I'm getting when there is a gap up opening. So the first thing is that if it crosses this black line, then the upside would be limited by 41,600, which is the recent high. So we can denote this with red line here. Okay, so this would be the expiry range. So it is quite wide in a sense. 41,000 would be definitely a point of straddle where maximum decay can happen, and it is a monthly expiry. So I do not expect that everything will go very smoothly. There can be big surprises, so you should be ready to handle big surprises. Okay, so this is the range for tomorrow, and the range is quite long, quite wide. This is quite natural because our process is what we are following. But even if you want to have a much of a TK, then you can definitely try something with this range where this 750 points range can be traded till 2 o'clock, and after that you cannot expect that the market would be very much easy. So let me just yeah, so this much range from here to here and from here to here. So this range can be a good possibility to trade tomorrow, and maximum theta decay can happen within this range. Okay, I hope you like the video. Do comment, subscribe, and share amongst your peers. Have a great day. Thank you.